Yo, what is good, you fuckers? This is finally Candle Range Theory Part 2. Full guide. Last week you should have done your homework, which was the theory of CRT, the theory of turtle soup, and putting it together in your charts. Now this is live examples on how you can actually apply it to things like NQ and Forex. I'll give you live examples, and I'll give you a strategy that you can actually use. Anyway, if you don't know me, my name is Krish. I'm 16. I dropped out of school 2 months ago. My credentials on my Discord. T's and C's apply, quick shameless plug. But let's get into the fucking video, right? Boom. Before I start, I just want to name some shit that you guys are doing wrong. Boom, 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 range. Oh, buying at OTE. You're getting a random price range buying at OTE and then you get stopped out. Boom, retire. Boom. Next. Turtle soup. I always preach turtle soup, but remember, ranges can either be broken through or turtle souped. So if it's in the wrong bias, you're gonna get fucking broken through instead of a turtle soup. So stop pattern trading turtle soup, you fucking idiot. Boom. Dumb money order block versus smart money order block. Remember, order blocks are only valid if they're post turtle soup. Same with fair value gaps. Don't just mark out random down close candles prior to an expansion, right? Boom. Smart money breaker, dumb money breaker. You can see that on Romeo shit. Anyway, another thing, fair value gap. This is the anatomy of a fair value gap. All it is a candlestick's high, which is just a lower time frame swing high that needs to be taken out, a form of liquidity. The 50% range between the candlestick's high and the order block of the bottom of the first candle, right? So fair value gaps are literally just order blocks and the candlestick's high. So when people tell you liquidity goes to fair value gaps and fair value gaps go to liquidity, that's just fucking retarded, right? It's liquidity to liquidity. Alright, let's actually fucking start it. Boom. A deeper understanding to turtle soup. In this video, I'll be teaching how to understand turtle soup at a deeper level to get a higher win rate and a higher RR. This video and the last video, with backtesting and a few of my other videos that I'm going to be posting, draws on liquidity, all this stuff, is literally enough to make you profitable in 3 months. One of my friends went from not knowing anything about trading, he didn't even know you could sell in the market, to getting his first 100k in 3 fucking months. If you can't do this with my teaching, which he did with mine, then you're fucking retarded. Boom. With a lower time frame risk, you can target a higher time frame reward using advanced entry systems, right? Lower time frame turtle soup of a range within a higher time frame turtle soup of a range. And that basically teaches you how to enter on the second candle of the 3 candle model, which is the turtle soup, right? In the 3 candle model, you get the first candle, the second candle, and the third candle. Romeo and Sham, this is literally a treat from Romeo. They say trade the third candle because you already have confirmation that the second candle turtle soups the first candle, right? But a lot of the time, especially on the Nasdaq and indices, the second candle takes out the first candle's range. And to get high RR trades and to not miss any trades, you must understand to enter on the second candle. And they say only advanced people trade this. Sham and Romeo, nobody's actually taught this in depth. They haven't taught you how to enter on the second candle the way that I will teach you. Right? Boom. So how do we frame lower time frame risk to target higher time frame reward? Well, we wait for a higher time frame range gets taken out within the liquidity pool of the higher time frame range being taken out. Within that higher time frame turtle soup, we'll look for a lower time frame turtle soup here. Then we'll obviously use our entry criterias, all that shit, our bias, and then we'll enter for long, targeting the lower time frames range, which, if we do get to this lower time frame range, means that the higher time frame range will also be bullish, because that means the second candle will now close bullish and a wick below this range. And so we can target lower time frame risk, put a stop here, entry here, but target daily highs, weekly highs, 4-hour highs. You can probe the highest win rate and the highest RR. If you view the market like this, then you understand the query. If you're only just going off of the 3 candle model, entering on the 3 candle, you don't understand how market flows. It's all just turtle soup within turtle soup within turtle soup. So if you truly understand turtle soup, you would be trading the second candle of the 3 candle model. And I'll be giving you examples on how you can do that. Boom. So lower time frame risk to higher time frame reward. First, you identify the higher time frame narrative and bias. I'll give explanations, live examples, and then after the live examples, even though you might find this confusing now, you might look back at this and be like, oh shit. Identify key levels above or below a higher time frame range, right? Wait for price to take out one side of the higher time frame range. Wait for one side of the higher time frame range to be turtle souped into a key level at manipulation time, and then within that higher time frame turtle soup, wait for a lower time frame range to be turtle souped in that into a lower time frame key level at a lower time frame manipulation time. This will be within the liquidity pool of the higher time frames range. You might be asking, what is liquidity pool? What is this? Like, I'm confused. I'll give you an example, and visual representation will do you justice in this. Keep in mind the higher time frame's opening price, because we want to be entering in the wick of the higher time frame candle, below the open when we're buying and above the open when we're selling. Then we just use our entry criteria, which for me is the correct CRTs, the correct time, SMTs, and the sequence. Then we can use our draws on liquidity and targets as the lower time frames range, opposite end of the range, the 50%, the OTE or the equilibrium or the 0.5% of the lower time frame range, or the 0.5 slash opposite end of the higher time frame range. Just targeting the lower time frame range and what I'm going to teach you will give you a 3RR minimum. That is plenty to be profitable. With 10 trades, with a 50% win rate, with an average of a 3RR, you make 10%. That's around 10% in a month. If you have a 100k, what is that? 10k a month. 6 months ago, I knew nothing about trading. Now I make more than my teachers, and I make more than my parents, making 10k a month with just CR motherfucking T. Boom. Power of 3 and time. Before I go into live examples, I need to go through this, right? You don't just look for higher time frame turtle soup, then a lower time frame turtle soup. You have to look at it in a time-based way, right? It's time and then price, time before price. You can have the best ICT concepts in the world, and you can have the best analysis in the world. But if you're entering an Asian session, you're gonna get fucked, right? So you gotta understand what are the times prone to manipulation. And from day to day, there's always gonna be manipulation. There will always be manipulation. However, there's times where that will happen. And on the intraday, there's going to be sessions, but on the higher time frame, there's months, there's weeks, there's days. So let me just go through that, right? The point is to trade the manipulation, and sometimes can be more high probability than others. To target higher time frame draw on liquidity whilst entering on the lower time frame, it requires an understanding of when this occurs. The ranges that typically get turtle souped are in the accumulation phase, followed by the manipulation phase, right? The key times for these phases to occur are the A means accumulation, M means manipulation. I'm not going to read them out. It's clear that you can read them. Remember that these aren't always perfect. Depending on if we are in an expansion candle or if we expect an expansion candle, or depending on the market conditions, it can differ, right? If accumulation expands, you either don't trade the next candle or you trade a different model, right? We don't always just get accumulation on Monday. We don't always just get accumulation on week 1 of the month. Otherwise, price would just continue in the same direction all the time, right? We would never get any ranging candles. But there are times where you can expect manipulation, and you should be trading the manipulation, especially on the intraday, at least on the intraday, right? If you want to catch the distribution on the intraday of any, whether it be London session, New York session, you always have to catch not the manipulation move, wait for manipulation to turtle soup some form of liquidity before you can catch the distribution move, and that happens every single day, 100% guaranteed, right? Boom. And bias is where you think price is going to draw to in a short period of time, anywhere from like the daily bias to the 1 hour, and the narrative is where price will draw to regardless of the bias for that period of time. So it's kind of like the bias but on the higher time frame. So for example, the daily bias for the 1 day is bullish. However, our weekly narrative is looking to push towards the candle range low, meaning it's bearish. So the daily bias is bullish, but it's only a retracement for the narrative pushing lower, right? Manipulation times, obviously I went through that, right? Boom. This is a good example. We don't have to focus on Monday's candle, but here I'm just focusing on this, right? And this can be within any sessions. This can be Forex, anything. But this applies deeply, right? Let's say this is Monday. Monday didn't, I mean, it was kind of accumulation, whatever. This is just for the example. Then Tuesday takes out Monday's range. And Tuesday within itself also takes out the low of Monday's range. So then how do we trade Tuesday if we don't have confirmation that it's turtle soup Monday's range? Well, we look for a lower time frame turtle soup. After the higher time frame turtle soup, we look for a lower time frame turtle soup within that to confirm the lower time frame direction down here, which confirms the higher time frame direction. So we can enter on the low time frame to get higher time frame risk to reward, right? So this is amazing risk to reward. So then we wait for accumulation, then a manipulation time on Tuesday, right? And Tuesday itself is normally a manipulation day. And then within Tuesday itself, we wait for our session to open. This could be London session. Then we wait for the lower time frame manipulation time into a key level, lower time frame turtle soup, at the higher time frame turtle soup to target higher time frame draws on liquidity. Hopefully this makes sense to you. And we can target 50% of the range. This is in turtle soup form. Sorry, this is in like lower candle forms. This can be viewed in candle range theory, and I'll go through that. This can be looked at as candles, right? The Monday candle and the Tuesday candle. And within the Tuesday candle, there's going to be lower time frame CRTs within the higher time frame CRT. That's what it looks like. But this is just what it looks like on, like, let's say the 5 minute, for example. So yeah, boom. Discord link in bio. Example. Alright, so I'm gonna go through another example and how time can apply to turtle soup, and how time can apply to accumulation, manipulation, distribution, and how within the manipulation leg or within the distribution leg you can look for lower time frame manipulation times, and within that lower time frame manipulation times, and in turtle soup form it's higher time frame turtle soup, and within that higher time frame turtle soup lower time frame turtle soup, all to confirm the directional bias of the higher time frame so you can get lower time frame risk to higher time frame reward. So here's an example, right? This is Bitcoin to Tether. This was last year. This is an example from Romeo. This is an entire month, the entirety of June, from Bitcoin to Tether. The first month is clearly we open here high, low, and we close here. It's clearly some consolidation with wicks going down here. Clearly a consolidation candle, right? Accumulation for the first month. For the first week. For the second week, we get manipulation, taking out first candle's accumulation. And then the third week, we get distribution. That is a classic monthly expansion, classic ICT buy candle, right? Within the liquidity pool, within the higher time frame turtle soup, now we go to the lower time frame, let's say the 1 hour, and we can see within the manipulation we get a turtle soup into a key level, which is over there, and then within that higher time frame turtle soup we form another range. Then we form at manipulation time at 7 a.m. Then take out previous day of that higher time frame turtle soup, and then we continue on. And if we want lower time frame risk to higher time frame reward, we go even further than that. Within this turtle soup, right, we go on the 15, or let's say the 10 minute. It's just a random example, 10 minute. I don't know why I'm using this time frame. And within this turtle soup, we get another turtle soup here. And so we use the order block off of this turtle soup. We take an entry here. This is obviously on a huge scale, right? This is a fucking swing trade. But you can gauge an understanding, right? Stop here. Let's go on the 1 hour so I can actually place it. And TP at this high. And if we caught this entire distribution move, that's 117 RR trade. And Romeo himself caught this, right? And this is on a large scale. But I hope it gauges a good understanding, because it's a really good example of how you can get a lower time frame risk, enter on the 15 minute, but target monthly highs, right? Monthly highs. Alright, here's an example. Market profiles are clearly bullish. Our institutional order flow is clearly bullish. I don't have any other higher time frame narrative that I can give you, but our higher time frame narrative was bullish, right? We closed above any bearish inducement candles, and this bearish candle can act as an order block. I didn't draw this up, but this is a key level. And we have this candle, and we have inside bars. And then Friday takes out Thursday's range, but it also takes out this day's range. But Friday in and of itself, it turtle soups it, but it also takes out the end of the range. So the 3 candle model, where the second candle is only a ranging candle, and then the third candle takes out the range of the turtle soup of the candle that it turtle souped, doesn't apply here, right? It's the second candle. It's the 2 candle model, if you want to call it. So how do we trade this candle? How do we trade the higher time frame turtle soup? Well, we look at the lower time frames. We look at the micro CRTs to confirm the directional bias of the higher time frame macro CRTs, right? So this is previous day. Boom, boom. So then we look at the micro CRTs, which confirm the directional bias of the higher time frame macro CRT. This is the macro CRT, and these are the micro CRTs to confirm the directional bias of this macro CRT, so we can trade this candle, right? So here we have 8 a.m. candle. Then we have 9 a.m. candle. And then the 10 a.m. candle. The 8 a.m. candle and this previous day candle gets turtle souped. And then we could wait for the second candle to close to trade the third candle on the lower time frame. And to confirm the micro CRT on the second candle, we can look for 15-minute, even more micro CRTs to confirm the directional bias of the second candle, and then the 5-minute CRTs. And so we can end up taking trades right at the bottom of the turtle soup, targeting the higher time frame with high probability, because what we're doing is we're confirming that price will turtle soup previous day candle by looking at the micro CRTs of the macro CRTs to confirm the directional biases of the higher time frame, right? So this is an example, but I entered on the third candle. This is the first candle. Then we turtle soup it. And we come down again. Again SMT. Entry criteria. Boom. But we can also enter at the bottom of this candle if we looked for micro CRTs within this, right? Alright, so I just recorded an hour's worth of fucking videos and my mic wasn't working. So I'll just give you a quick example because I didn't feel like the video felt juicy enough. I'll have a part 3 obviously, but this is going to be like my last example. Give me any suggestions of any examples, anything that you want from me, and I'll fucking post them. Now I'm posting almost every day. Every other day I'll be posting a YouTube video, right? Anyway, let's get into it. This is an example, right? The daily time frame. Our weekly narrative is bearish because we got a close below previous week candle, so we can expect this week to close here. That's just with CRT. That's not with anything else, just with CRT, because that's all I've taught you so far, and this is enough for a high win rate, 70% win rate, right? and this is if the 40 range low. Anyway, we come down. Let's go on the 4 hour. Once we look at our CRTs, we find the higher time frame narrative. Now we must gauge the market profiles on the 4 hour and on the 15-minute or the 1 hour, right? On the 4 hour, you can clearly see we're turtle souping, we're rejecting highs and breaking through lows. We're rejecting highs, breaking through lows, rejecting highs, breaking through lows, rejecting highs of the previous day and breaking through this low. And then, obviously, the day's already played out, and like it's already played out up to here. But from here, I would see, I took this trade by the way. Here I saw, okay, so we're now rejecting these lows. Now we're gonna pop up above a high, and then break through these lows again. Because in a bearish market, any pop up above a high is a turtle soup before shorting. Right, turtle soups happen at manipulation times before the distribution. Every single day there will be manipulation and distribution. Every single day without fail. Right? Sometimes, some days, some weeks might be weird. They might be ranging, but every single day, intraday, especially if you're entering on the 1 minute, you can find a trade enough with the 1 hour and the 4 hour candle bias. Because every single day there's a manipulation on NQ and every single Forex and indice pair. There's manipulation and there's distribution. And with NQ, obviously, the manipulation could be London session. They can be different sessions. London session, New York AM session. For this example, it's New York AM session because it's the most volatile, right? So I'll wait for the New York AM session manipulation into a key level where we get a turtle soup of a major high like the 8 a.m. 1 hour high or the 4 hour high before distributing to the downside or the upside depending on my bias, right? Boom. So I see that, and on the daily you can clearly see we get the 3 candle model, beautiful. Second candle wicks above previous day candle. Even though it's a bullish candle, it means there's less probability, but it's still high probability, right? We got an SMT here indicating a reversal. So we can expect this third candle to at least go to the 50% range of the first candle, which the second candle didn't. So this is a very high probable day. Now, within the third candle, within Tuesday's day, we now just look for a pop above an old high before distributing to the downside, because our bias is bearish, right? So we get this 2 a.m. candle, it gets turtle souped at a key level where this order block is, right? But to confirm that old turtle soup it, we need the lower time frame CRTs to confirm the directional bias of the higher time frame. So we get this 7 a.m. and 8 a.m. candle being turtle souped at the time. This is also a rejection block and can be a key level. And to confirm that this will turtle soup, we go on the 15 or let's say like fucking 10 minute. And what can you see here clearly? What can you see here? Boom. Second candle wicks above previous candle at a higher time frame key level and at a rejection block, a lower time frame refined key level, and the 10-minute confirms the 1 hour directional bias, and the 1 hour confirms the 4 hour directional bias, and the 4 hour directional bias confirms the daily directional bias. So now that we've gone all the way down to a 10-minute where this is wicked above, we can now enter on the third candle, which is 940. Boom. Let me just zoom out. And guess what? This is the 920 to 940 macro. Boom, right here. And we got accumulation, classic 30-minute power of 3. 9 a.m. open. Where the fuck is it gone? And 9 a.m. open, we get consolidation. All the way to 9:30, and then from 9:30 to 9:40, so for that 10-minute manipulation phase, we go above, take out the pre-manipulation liquidity pools and a higher time frame form of liquidity with SMT here, which indicates bearishness, plus we get higher time frame SMT and lower time frame SMT to confirm the directional bias of the higher time frame SMT to go to the downside at a key time, a key manipulation time at 9:20 to 9:40, which is a certain macro. Then we wait for our entry criteria. For me, it's the sequence, but on this day, I entered off this inverse here. I entered like at market, boom. I think my stop was like here, and my TP was at these 1 hour lows, and I took partials here, 1 hour lows, and then all the way to these 4 hour lows. And if you really wanted to, you could target the previous day candle range low, or because we knew the directional bias was bearish and we got a perfect 3 candle model, guess what? We can target the first candle's range low, which is over here, which I saw some people do. And guess what this would have got you? A 13 RR trade whilst entering on the 1 minute, whilst targeting daily lows. That's how you can get lower time frame risk to target higher time frame reward. Hopefully that was more understandable. I know this clip was less concisive. I was less fucking enthusiastic. It was kind of quicker because I wasted an hour recording when my mic didn't fucking work and all the videos deleted. So yeah. Boys, this was a shorter video today, but I'll be definitely coming back and doing videos on draws and liquidity, all that shit. Like, subscribe, do all that faggot shit. I'm 17 years old. I dropped out of school. Free fucking everything. Free source. Free one-on-one mentoring in my Discord. Boom. Thank you.